Okay, so let's get started. First of all, I want to say, guys, I'm a little sick today. I've got the flu, unfortunately, or a cold, whichever. I'm a bit sick. Um, I only started getting sick yesterday, so I didn't really want to cancel the webinar because I know a lot of people changed their schedule so they could be here tonight, and I didn't want to let everyone down. So I'm going to do the webinar anyway, but please understand that my throat and my nose are killing me. So if you hear me coughing or breathing weird, heavily, or like my nose, whatever, please understand that I'm just a bit sick and there's nothing I can do about it. I just thought, I might as well go ahead and do the webinar because I didn't want to waste your guys' time. So anyway, let's get started. In today's webinar, we're going to be talking about trading in low volatility conditions. For the last few months, Forex has fallen into low volatility, the lowest we've seen since around about 2005. Now, I realized that recently we've been getting some higher volatility and Forex might be coming out of this period of low volatility. Things, at the very least, seem to be stabilizing, and we might be getting some higher volatility soon. However, we can't really bet on that. You can't just say, ooh, well, summer is over, so volatility is definitely going to go back up, and my old way of trading is gonna start working again. You can't really think like that. Low volatility is around now, and it could be around for a long time. For me and the other advanced course members, these conditions have actually been fantastic. A lot of people see low volatility as a bad thing. However, if you know how to trade in low volatility, it can actually be great. I just want to show you guys an example between high volatility and low volatility. I want to show you guys the difference between high volatility and low volatility. And I just want to illustrate what exactly this period of low volatility is, what exactly it is, because a lot of people don't fully understand, the major impact it has on your trading and how the Forex market moves. So let's open a new GBP USD chart. It'll probably be better. All right, I'm going to pick one of the biggest recent candles, which is pretty much this one, I would say. Actually, let's switch to the daily. Let's go for one of the biggest recent daily candles, which I would say would be this one. So if we look at our charts, this is pretty much the biggest, maybe this one, but let's just go with this one. It doesn't really matter that much. So I'm going to place two lines here that span between the high and the low of this candle. So this currently for GBP USD for the past few months is one of the biggest daily moves we've seen. So we got this marked. Now let's go back to, I don't know, 2009. Now that huge candle in 2009, we can see was actually very, very common. This candle spanned 160 pips. That's one of the biggest daily candles we've seen in recent months. But back in 2009, 160 pips was small. There's 290 pips for a single daily candle. This is what the difference is. This is what I mean by Forex volatility is getting lower. I mean, even this small candle here, this tiny candle here is 160 pips. That's an indecision candle. That's a candle that forms at the end of a trend that indicates that price is possibly reversing. And that is 160 pips. When today, you almost never see a candle of 160 pips. You can clearly see the difference here. We need to, one second guys, I'm just reading what's being said in the chart. Richard. The webinar's already started. Anyway guys, can we keep questions until the end? And can I double check that everyone can hear me at the moment and everyone can see my screen? All right, cool. Okay, so basically what I was saying is this is one of the biggest daily candles, but back in 2009 or even back in 2011, this was relatively small. I mean, I think Euro USD has some better examples of this. Euro USD. Let's ignore these two candles because they're just crazy candles that form today. Let's pick one of the biggest normal candles on Euro USD. Probably this one. Then you go back to, I mean, even to 2013, the start of 2013 for Euro USD, volatility was much higher. I mean, if you look at volatility now, you'll see the size of these candles and they're relatively small. This is probably one of the biggest daily candles, aside from this one, which is just crazy and it was caused by news today, so we won't really count that one. But even back in June 2013, candles were much bigger than this, just your normal everyday candles. We can see pretty much every candle here is bigger than the biggest candle we've seen on Euro USD for the past few months, excluding today's crazy candle. And if you go back to 2009, the contrast is even greater. I mean, 2008, I mean, look at this stuff here. A candle that spans in a day 307 pips on Euro USD. A candle in a day 550 pips on Euro USD. Well, I mean, that's not fair. That might just be a problem with your internet, Leonardo. So I'm just going to continue with the webinar. Anyway, so I don't want to bore you guys any longer with this. The point I'm trying to make is volatility has dropped down significantly in Forex. And even though now it seems like it might be picking up again, it's going to be a bit of time before it recovers completely. Because the drop has been pretty extreme. I mean, we're seeing 2005 lows in volatility. And of course, that's going to change the way you're trading. For me, the low volatility has been fantastic. It's been really good. And it's because the markets are a lot calmer now. I mean, imagine trading in 2009. Imagine trading in a time, and I was trading it in 2009, but imagine trading in a time when you can look away from your chart and 40 minutes later, price can move 450 pips. I mean, who wants to trade in that kind of market? It's just absolutely crazy. Since 2012, volatility has been pretty okay, but it's been dropping lower and lower. And this recent period of low volatility for me personally has been even better than 2012, 2013. But why is low volatility better? Well, one of the biggest reasons is that there are less surprises. Low volatility markets are much more relaxed and much more predictable, which is important. Predictable trades are what everyone wants. Yes, you make less pips, but who cares about pips? As a Forex trader, you don't measure your success in pips. If I have, let's say, a 20 pip stop, and then someone has a 40 pip, if I have a 20 pip stop and a 40 pip target, and someone has a 200 pip stop and a 400 pip target, we both hit our targets, and I'm making £100 per pip. The guy with the 400 pip target is making £1 per pip. I've still made a lot more money. So I'm not bragging saying that I trade £100 per pip. I'm just trying to make a point that less pips isn't necessarily a bad thing because your stops are tighter. So your money management can change the amount of lots you're using per trade. So low volatility, it does have its drawbacks. Less pips, definitely. But less pips aren't necessarily a bad thing because you just adjust your lot size and less pips don't really matter. You can make more money with less pips. So overall, this low volatility period has been really good for me. But for a lot of people, it's been causing some problems. I mean, if you look at Forex forums, you'll see a lot of traders that were doing very well, but have recently started to fail. Harry, that's a decent question. If price doesn't move that much, Harry is asking, if price doesn't move that much, don't you get decent good risk reward ratio. You do get a good risk reward ratio, but we'll look at some trades. We'll look at some trades and you'll get to see the risk reward ratio for my recent trades. We're going to be looking at actual recent trades that have been taken by me and members of the advanced course. Most of the trades are going to be from this week, and you'll get to see the risk reward ratio on those trades. Anyway, so this is what I'm going to be talking about today. I'm going to be talking about low volatility. I'm going to be showing you guys some recent trades. I'll be showing you some bad trades because you learn more from bad trades than you do from good trades. But like I was saying earlier, to be honest, we haven't really had that many bad trades recently. And I'm not boasting and saying, ooh, I don't have any bad trades. Because if you look back at my previous webinars, you'll know that I like to discuss bad trades. I like to concentrate on the bad trades because you learn so much more from them. However, in all honesty, the last few weeks have been really good and we just haven't had that many bad trades. So I think as far as bad trades go, I can only show you 1 or 2 examples this webinar, and then I'll show you guys a few good trades, because I think the best way to learn how to trade price action is to look at actual trades, because then you can see how the trade formed, the reasons I entered or the reasons members of the advanced course entered. You get a good idea of how the strategy works and how we used price action to take those trades, support, resistance, price action, all that stuff. And of course, I'll be answering questions. Now, this webinar I was supposed to talk about low volatility trading in a little more detail, but because I'm sick at the moment, because I've got the flu, I didn't have as much time to prepare for everything I wanted to talk about in this webinar. So we're going to scale that back just a bit, but I am going to be writing about that in detail when I post this, or a few days after I post this webinar. So low volatility is still going to be discussed, and it's still the center point of discussion for this webinar. But we're going to be doing a lot more trade examples, which, to be honest, I think is what people want anyway. But yeah, let's get started. We are going to, I guess, start off with a bad trade example. Now, I'm not sure how many of you guys are familiar with the way I trade. I'm assuming a lot of you are. Are there people here who aren't familiar with the way I trade? All right, so there's some people that aren't familiar. Okay, so what I'm going to do is I'm going to talk a little about the way I trade, but I'm not going to cover my strategy in too much detail. Now, the reason for that is because if I cover my strategy in a lot of detail, we're not going to have enough time. I mean, I can't wrap up my entire strategy in the next 45 minutes. So I'm going to kind of talk about that in parts, but mostly we're going to be looking at some recent trades. That way you guys can see how I actually put the strategy into action on recent trades in low volatility conditions and how trades have been profitable in low volatility conditions. What do you mean don't do that? Alfredo. And Alfredo, by the way, you're typing private to presenter. Can you hit that little drop down button and click send to everyone? That way everyone can see what you're typing, because right now only I can see it. It seems like a lot of people from South Africa are having choppy sound. I'm not sure why that is. But anyway, let's keep going. So, I'm not going to talk too much about my strategy because it's going to take up too much time. But when I do post the recording of this webinar, I will be linking to some videos on my strategy, some free videos that explain my strategy, because 4 or 5 months ago I did 3 webinars in a row over the course of 3 days in which I discussed each part of my strategy in a lot of detail. So you guys are going to know, for those of you who don't know exactly how I trade, you guys are going to know that with the recording. So we're going to take a look at a few trades. I'm going to start off with a bad trade taken this week. it was a negative trade. It was taken this week. It was a short on New Zealand JPY. Now, it looked like a pretty decent setup overall. So let's highlight this setup here. Oops, wrong tool there. Damn it, why isn't... there it goes. Okay, so we're going to look at this bad trade. And to do that, we have to actually switch to the 12-hour chart, which is here. Okay, so let's check out this bad trade from this week. This is a pretty good example of a bad trade because there were a lot of opportunities to close out, and most people who took this trade closed out with profit, but only very slight profit. Some closed out at break even, some closed out with a very slight loss. I don't think anyone took a full stop loss on this, but it's possible. I didn't speak to everyone who entered this trade, but we're going to look at this trade in detail because this is a good example of a bad trade. And the way we're going to do this is I'm just going to explain exactly why this trade was entered, how it was entered, why it failed. And you guys can feel free to ask any questions about this trade. I'm sorry about the sound, guys. I think most people are fine with the sound. I mean, is everyone having issues with the sound, or are most of you fine? Yeah, it looks like most people are fine, so let's keep going. All right, so this bad trade that formed this week. Basically, what we had here was a bullish preceding trend. The preceding trend wasn't that strong, but overall, it's quite clear that for most of this move up, buyers are in control of price. There was a period here where it was kind of switching between buyers and sellers, but for most of the move up, buyers are in control of price. So we had a decent bullish preceding trend. Then we had indecision forming on top of an area of resistance. Now, for those of you who don't know what resistance is an area in which there are sellers. Now, I have these support and resistance areas pre-placed on my chart. I have them placed before price actually reaches those areas. So this was placed before price reached this area. When price reached this area, what we got was an indecision candle. So what's happening here is buyers are pushing up. They hit this strong area of resistance, an area in which we know there are sellers. And all of a sudden we get this candle. It has a long upper wick, a small body. That indicates that buyers and sellers are struggling. We went from a market controlled by buyers were in control pretty much the whole way up, to the struggle between buyers and sellers. And what happens after that struggle? This is what happens. Sellers take control of price and they make a new low. So they push down and they make a new low. So a lot of people in the advanced course took this trade. So entries were varied, but most people entered this short around about the 87.30, 35, let's say 87.30 to 87.35. So that's 87.35. And the stop loss was about 20 pips. Now, sometimes I like to place my stop loss. Well, it really depends. I mean, I prefer placing my stop loss above the wick of the indecision candle. So my stop loss would be up here. But it really depends on the setup. I mean, sometimes the risk reward ratio, if you place your stop loss all the way at the top of the wick, it's just going to be, you're just going to get a horrible risk reward ratio, especially if that upper wick is kind of long. So if you were to place your stop loss up here, the risk reward ratio just would not be that fantastic. It would be roughly, it'd be roughly a 27 pip stop loss. And then the target would be around about here. The target is around about here. That is the first target, not the whole, not all of it. That's just the first target. For the first target, I tend to have a rule of a minimum of 1-to-1 risk reward ratio. So this would have, just met that minimum of 1-to-1. But the stop loss was placed around about up here. Now, this trade clearly didn't work out. It didn't even hit its first target. Its first target, like I said, was around here. Didn't hit its first target, let alone its second target down here. What happened with this trade was it just ran out of steam. Sellers looked like they had control of price. They pushed down, they got down to here, and then they came back up, Next candle comes in, makes a new low, isn't able to make a new high, and it closes with a bearish body. So still, this trade is still looking okay, although it's not looking that good. And then this candle forms, and this candle has not made a lower low, hasn't made a higher high either. Then this candle forms, and it just started looking really bad from there on out. So this is a clear example of a trade that just kind of runs out of steam. We're entering short on this trade because we assume buyers have taken control of price. We look at this and we say buyers have taken control of price because they've made a new low from this resistance area. So that says to me, buyers have taken control of price. I can jump in, and at a bare minimum, I can meet my first target, which is here at the 87.05 level. Sadly, you know, that didn't happen. I mean, the sellers just weren't strong enough to push down that far. Would you have entered on an indecision candle? No, I don't enter on the indecision candle. I enter after the low of the indecision candle is broken. And I probably didn't mean to say sellers have taken control. So sellers took control of price here. They pushed price down, but they just couldn't maintain that control. And this trade just ran out of steam. It's just an example of a trade in which sellers run out of steam. Most people close this trade out around about here because of the Bank of Japan's monetary policy. It was an important news release coming out, and the trade really hadn't made its move. So a lot of people just decided to close out because of that, because an important news release was coming out, and the trade was close to its entry, and it didn't look like it was going to make its move. It looked like sellers had no way to gain complete control of price. So, you know, we get trades like this every now and then where sellers just run out of steam. They just can't keep moving, or buyers if we're in a long trade. So, you know, this trade, it doesn't have to be a total loss, because when you see something like this, you realize you've made a bad decision, and you don't necessarily have to get out. A lot of the times I'll stay in, especially if lower lows are being made. I'll stay in, but you know, if 2 days after getting in your trade, the trade is still at its entry point, pretty much at its entry point, which it was here, you know, that's generally not the best sign. And if an important news release is coming out, that could cause a pretty large movement on this pair, and it's at entry point after 2 days, you may as well jump out of the trade. But it really depends. I mean, there have been cases where I've stayed in trades that looks pretty bad for a while. But I just wanted to show you guys an example of this trade because it's not a great trade. And when you're trading price action, this is going to happen. And you have to be able to understand when price is running out of steam, when sellers just aren't continuing to control the market. You jump in because you think sellers are in control, but they don't have complete control of price. And several days later, you're still at your entry price. And that's generally a bad sign when several days after you enter a trade, you're still at your entry price. You don't know it's an indecision candle until the trade has been closed, until the candle has been closed. Yes, but the trade is not entered. This is the indecision candle. The trade is not entered until this candle. So this is when it closes, you enter the trade here on this candle. Yeah, because this is the indecision candle and this is the entry candle. Usually, I know this is also an indecision candle. I realize that, but when you were entering, you wouldn't realize that this is an indecision candle. When you're entering, you would say, this is the indecision candle. Indecision candle low is being broken, so I'm going to jump in this trade. No, it definitely is a trade to take. I mean, this is a pretty strong setup. There's been several of these setups this week that have worked out quite well, which I'll show you soon. Does anyone have any questions about this particular setup? David, I would say you are too cautious. I mean, I'm probably one of the most cautious traders I know when I would enter a trade like that. Yeah, this is a 12-hour chart. What's happening basically is buyers are taking control of price. So we got buyers taking control of price. August 21 trade. Wait, let me see what trade you're talking about. August 21st. This here? Is this what you're talking about, man? Okay, this is not a trade for a lot of reasons. But I'm glad you brought this up because I guess it's a good lesson. Okay, basically, why isn't this a trade? Now, one of the major rules of my strategy is that the indecision candle form on or at least very close to the resistance area, the support resistance area. This candle formed well below the support resistance area. So if I were trading this, which I wouldn't, but let's say I was trading this, my entry would be here at the low of the indecision candle. My stop loss would need to be up here because I'd want it at the very least above the resistance area. So we're already talking about a stop loss of 34 pips. First target would be in this mess here of minor support resistance. First target would be 10 pips. That's the risk reward is just horrid. And you just would not enter a trade like this. Generally speaking, you want your indecision to form on top of a support resistance area. It has to be here. And you have to have a good risk reward ratio, which generally means the lower wick of the indecision candle is quite small because we're using that as a trigger for entry. We don't always use that. Sometimes we use psychological levels, but generally speaking, you want a new low to be made because that indicates that sellers are taking control of price. So when that new low is all the way down here and your stop loss has to be all the way up here, that's just not a viable trade. But there was in fact a good New Zealand JPY trade last week here. Now let me remove this arrow here. Okay, so this trade was an example of a really good trade. And it's very similar to the one on the 12-hour chart from this week, but except this one worked out on the 8-hour chart. It worked out really well. Well, not really well. It hit its first target. I don't want to show you guys trades that worked out perfectly well because, you know, I really dislike that about Forex educators. They'll show you trades and they show you the best trades they've taken in the past few months. But what are you going to learn from that? What are you going to learn from me saying, this is a perfect trade setup and it worked out extremely well for us and we made 200 pips? You know, you don't learn much from that. I prefer to show trades that it didn't work out or trades that didn't work out exactly how we wanted but still made profit because there's more to learn from that. There's more to learn about how to manage a trade and how to still get profit from a trade that hasn't gone exactly how you wanted. There's a lot more to learn from that than there is to learn from, ooh, look at this perfect, beautiful setup that worked out amazingly well. Because that's kind of just bragging, really. So anyway, let's talk about this trade that it worked out okay, but not amazingly well. So we had a strong bearish preceding trend. Now this was actually a very strong preceding trend. So this was sellers in complete control of price right until our support area is hit. So this is our support area. The support area is there before price hits it, but when price hits it, buyers start to fight against sellers, which is what we expect. When price hits a support area, buyers and sellers start to struggle. It's not always going to happen, but when it happens, that's when we start to look to enter a trade. So, wait, let me get, yeah. Okay, so we had the bearish preceding trend, sellers in control of price. We had them hit this support area. And then all of a sudden we start to see this struggle between buyers and sellers. So we went from a completely seller dominated market, so price was completely dominated by sellers, into this struggle between buyers and sellers. Buyers and sellers are now struggling for control of price. And we get this kind of formation here. Now this is the kind of like ideal formation I look for. A nice long lower wick. It's not good when it's too long, but you know, a long lower wick indicates that sellers tried to push down, but buyers completely countered that move. So a long lower wick, upper wick reasonably short, bullish body indicates that buyers are more in control of price than sellers, but overall it's still indecision, and indecision means just that. Buyers and sellers haven't decided. We're not sure who has control of price. So so what happened here was the entry for this trade was placed around about the top of this indecision candle, around about here. Stop loss was quite tight overall. It was just below this support area. Now, we usually place our stop losses below support areas because support areas act as kind of buffers. Support areas are areas with buyers. So if sellers are able to break through the support area, if sellers are able to take control of price and break through this area, indicates that buyers have little chance of regaining control of price. So that's why our stop loss is triggered at that point. So the stop loss was relatively tight on this trade. The entry was around about 86.70, perhaps a little bit higher, depends. Stop loss was about 15 pips, so it was around about down here. First target was around about 30 pips. So 1 to 2 risk reward ratio on first target is fantastic because the second target was around about 70 pips. The second target was never hit. But as we can see, the first target was hit quite quickly. I mean, price just shot up, hit that first target, 30 pips taken out. Usually how I handle my trades is when your first target gets taken out, close out 50% of your position, move your stop loss to break even. And by break even, I mean the entry price. So as you can see, in this case, that wouldn't have worked out too well because the stop loss was moved down to the entry price and this candle hit the entry price. So that trade was closed out and it continued to move up. Now, it depends. I mean, a lot of people who took this trade ended up closing out both positions around about here when price started to get sluggish and not move in this area. A lot of people closed this trade out with 30 pips on both positions. Some people held out and had it stopped out at break even, but they still made profit overall on the trade. It just wasn't the profit they were looking for. They never, I don't think anyone actually got that second target in this one, unfortunately. But you know, that happens. I mean, not every trade's going to work out perfectly. We've had a lot of fantastic trades. I'm just showing you guys these trades that don't work out perfectly because I want to show you guys that trades don't always work out perfectly. And when you come to a trade like this, there's several ways to manage it. You know, first you could just have your stop loss at the entry price around about here, and then that stop loss gets hit by this candle, or maybe even possibly this candle. But we're placing our first target here because of minor support resistance. That's why we're placing our first target here, because we can see last time price pushed up through here, what happened? Price came up here, bam, hit this, stalled, came up and eventually went through it. Then it came back down, comes back up to here and it stalls again. So we can see signs that when price reaches here, buyers kind of start struggling. They kind of start having a hard time continuing to move up. So that's why we set our first target there, because we know that because this has happened in the very, very recent past, that it's entirely possible for this to happen again. So that's why we set our first target there. And the first target's larger than the stop loss, so that's all good. And if price starts to struggle long term at your first target, a lot of people end up closing out the trade, which a lot of people closed out the full position around about here. So it really depends how you want to manage your trades. It's a thing that's rarely discussed in Forex, managing your trades, because picking good price action trades is not really that hard. It's not difficult to pick a good trade, but a good trade can end up being a loser for a lot of people and a winner for other people. It comes down most of the times to how you choose to manage your trade. And, you know, different ways to manage your trade lead to different success rates. Some people could use the same strategy as you're using and not manage their trades well, and they end up losing almost every trade. So a lot of it comes down to how you manage your trades, and this is why I like to take my first target, a small first target, because I like to lock in profits. Because once you lock in profits, then you can rest easy. You move your stop loss to the entry point, and usually if the trade's going to continue, it doesn't do this. It doesn't come back down to your entry point, take you out. It continues to move up. So, I mean, this wasn't a fantastic trade, but it was a nice, let's say 15 to 30 pips, depending on who took the trade. It was a nice 15 to 30 pips, and it was a relatively low risk trade. So overall, it was worth it. Does anyone have any questions about this trade? That is a good question. Do I want the body of my indecision candle to be on the support area? Now, ideally, the best setup, the most perfect setup is the body of the indecision candle to be right on the center of the support area. That is the ideal setup. Now, why is that the ideal setup? Because usually that leads to the best risk reward ratio. If the body of the indecision candle is down here, then the wick is like here, and you're going to want your entry to be above the high of this area, because this is a support or resistance area. So if price is below here, you want it to be above here before you enter. So that's going to lead to a horrible risk reward ratio if the body is down here. Now, if the body is too high, if it's above, so if the body is up here, your entry ends up being up here somewhere, that's going to lead to a huge stop loss. And again, it's not going to be that fantastic. Even if your stop loss is just here, it's not going to be that good. So generally speaking, you want the body of the indecision candle to be right on top of the support area. There are obviously exceptions, but the perfect setups are the ones that have the body right in the center of that support resistance area, because it's going to lead to a much better risk reward ratio. On Euro GBP, there's a very long pin bar forming. Ooh, look at that. That actually looks awesome. Thank you for alerting me to that. It is a news-based move, and generally the news-based moves are good, because generally speaking, when we see something like this, okay, when we see something like this move was caused by the news release. The interest rate from Europe. This is what caused this move. So this huge move was caused by a news release, and moves caused by news releases tend to retrace very well. I mean, they tend to retrace back to where they started before the news release, and that is quite common. Now, the only thing that worries me about this is this was such a significant news release that it could very well keep falling and it might not retrace. But that being said, this is starting to look like a pretty decent setup, and I'm definitely going to keep my eye on it on the 8-hour chart. Not the 12-hour chart yet, not the daily chart yet. 4-hour, probably not. 6-hour. Now, I'm going to be looking at this on the 8-hour chart. I'm going to keep an eye on this. I'm going to add it to my watch list. I'm going to post it to the Advanced Course Forum, and we're going to keep an eye on this trade. It might potentially be a good trade. Thanks, Andrea, for pointing that one out. It happens often after news. Andrea is asking, and does this happen often after news? And what do you do in these events? It actually is quite common. I mean, I tend to find more trades on a heavy news week because news causes these kinds of moves. Now, usually it's not this big. This week has been crazy with the release today. But generally speaking, you'll get like a news release causing a huge move. And where is that move going to stop? You know, when a news release comes out and price goes crazy and it pushes up, where's it going to stop? Generally speaking, it stops on top of a support resistance area, because this area, we know there are sellers grouped in this area. So when price hits this area, this is usually where it stalls. So when price stalls here and then we get indecision forming here, and we know that this move was caused by news, then generally speaking, like I said, moves caused by news have a high chance to retrace. And the fact that we're getting that kind of perfect, I guess, trio of signals, we're getting strong bullish preceding trend. Let's say the news was bullish. We're getting it right on top of our pre-placed resistance area. So that resistance area was there before price hit it. Then we get that indecision forming, and we know that that move has a high chance to retrace. That's kind of like your, I wouldn't say perfect setup, but that's generally a very good setup. And that's what we're seeing right now. I'm not saying I'm going to enter this trade. Obviously, we need this to close, and then you need to plan the trade, because you don't just jump in blindly. But this so far looks like it could end up being a good setup. My largest concern with this trade, because I don't want any of you guys to go jumping into this trade tonight if it triggers, be aware that tomorrow is NFP. NFP is the biggest news release in Forex. Probably not bigger than today's news release, but generally speaking, NFP is consistently the biggest news release in Forex. And I try not to trade on NFP day. So that might keep me out of this setup if it actually does end up forming. No, you're not wrong. EDW is saying that tomorrow's non-farm payrolls plus today's crazy news, it'd be hard to trade tomorrow, and I completely agree with that. How do you get these support resistance areas? I will be updating my support resistance areas, but generally, I don't want people to copy my support resistance areas. You have to learn to place your own support resistance areas. Learning to place your own support resistance areas is one of the most important skills you'll learn in Forex. I don't like it when people just want to copy my support resistance areas. When they say, Nick, what are your support resistance areas so I can put them on my chart? I give out my support resistance areas so people can place their own and then compare them against mine to confirm that they're right. But I don't like it when people just want to copy my support resistance areas. You should learn to place them yourself. And I am going to be linking you guys to videos on how to place support resistance areas along with the video of this webinar. I've done a few webinars on how to place support resistance areas, and there's some articles on the website. It's all free stuff, so I'll be linking you guys to how to place support resistance areas. I'll also be linking you guys to a page with all my support resistance areas for about 6 or 7 pairs. Anyway, thanks for bringing this trade to my attention once again, Andrea. I'm not saying I'm going to trade this because of NFP, but it's definitely something I'm going to watch. I might possibly trade it. We'll see how it turns out. What other trades? On NFP, I trade nothing. NFP, I try trade nothing on NFP day, because every single pair in Forex is affected by USD. It just is. That's just how Forex works. So even if it's not a USD pair, New Zealand JPY, it's affected by USD. So any news that involves USD, especially very, very important news like NFP, is going to have an effect. Sometimes it's minor, but sometimes it could be quite a major effect. GBP you want to look at. Sorry guys, this platform isn't my main trading platform. I don't use MT5 anymore. I use eSignal at the moment because it's much better, but for webinars, eSignal is a little laggy, so I don't have all my pairs set up on this platform. What would you like to know about GBP? It depends. I mean, is there, a prerequisite for a trade is there has to be support resistance there. So is there support resistance here? Possibly. Nah, I would say it's a stretch placing your support resistance area here. Yeah. There's not that much evidence for support resistance here. I wouldn't really pay much attention to the GBP CHF. I use eSignal for my charting. I use eSignal. It's too big on eSignal, but it's a really expensive platform. I was just saying, you guys shouldn't go out and get eSignal unless you can afford it. You shouldn't get eSignal. Our broker, I don't really discuss my broker. Anyway, let's move on, guys. I wanted to talk about a few more setups. We're kind of getting off track. I don't discuss my broker because I've discussed my broker in the past and people automatically say, oh, Nick trades with that broker, so I'm going to go open an account with that broker. And then they open an account and they don't experience, the experience is not good, and then I get the blame. I don't recommend I don't recommend brokers anymore. I just don't like to. Everyone has a different experience with brokers. New Zealand USD, okay, we'll look at it in a sec. Why not eSignal? Because eSignal is $280 a month. And if you're not trading at a professional level, it's kind of silly to spend that kind of money on your trading platform. You know, you shouldn't spend that kind of money unless it's an actual business and you're actually making that kind of money. Well, obviously more than that kind of money, but you're making enough money to cover that expense. All right, see your hands. But anyway, guys, let's move on. Let's stop talking about charting platforms and stuff like that. You wanted to look at New Zealand USD, Andrea. Where was the indecision candle? Here? On the 8 hour. On the 1st of September. Here. You jumped in short. I don't really see the setup here, to be honest. But anyway, let's just move on and look at the setups I wanted to look at. Are you sure that's what you mean? 183.10? Here. You went long here? Yeah, it looks like a decent setup. Well, actually, no, not on this, but I know what you mean. If you were on a different time zone, I remember seeing this too. Your charts are on a different time zone to mine, so the candles are going to appear slightly differently. On my eSignal platform, I can change the time zone on my candle, so I know what you're talking about. Someone asked me about this trade in the advanced course. Let's check out this recent trade. Now, this is an example of a pretty decent setup, but where's the right tool? Okay. So we have a strong bullish preceding trend. We have indecision here and then indecision here. Now, I wanted to show you guys this setup because, again, it's not one of those absolutely perfect setups. We have two indecision candles. And the first indecision candle is this one here. And it's not really that amazing an indecision candle because the low is here. So it would make the risk reward ratio pretty bad on this setup. And then the second indecision candle is here. And a question I get asked often is, which indecision candle are you using? So which indecision candle do you decide to use when you get something like this? And the answer is the second indecision candle. The most recent indecision candle is the one I use. This is the candle that I would use in this situation. I wouldn't use this candle as indecision. I would still be concerned what's going to happen when price hits this low here, because price needs to create a lower low there. But overall, this is the important candle, the most recent one, and I would use this to get my entry, to get my stop loss, and to as a trigger to enter the trade. And in this case, it worked out quite well. I mean, this was one of those picture perfect shorts. It was entered here. What do you mean isn't spread too high? No, I know what the spread is, but what do you mean the spread's too high on USD CAD? Yeah, we'll get to that in a sec. This candle opened at 6 a.m. Yeah, this candle opened here, guys. So price pushed up before the trade was triggered. The trade was triggered down here. You can see after the trade was triggered, it didn't move back up. Well, it moved back up there, but that wouldn't have hit the stop loss. The trade was, that push up was before the trade was triggered. So yeah, it wouldn't have been a failed trade. But that being said, there was a trade that failed like this, which I want to show you guys before we finish. No, I don't enter on the 1 hour chart. I enter on whatever chart I'm trading. I don't see any reason to drop down to the lower time frames. I mean, I set my entry here, 1.0920-ish. Price broke. That's where you enter. There's no reason to drop down to the smaller time frame to enter. Now this would have been a I guess picture perfect trade. This would be a picture perfect trade aside from this indecision candle. The reason I wanted to talk about this was because of this indecision candle. It's quite a common question, and I could totally see why this is a big concern. When you get two indecision candles, one would lead to the trade not being a viable trade because the risk reward would be way off, and the other one would lead to a good trade. Which one do you pay attention to? You pay attention to the latest indecision candle. This is a 6 hour chart. Stop loss would probably be just above the resistance area. Generally speaking, I place my stop losses just above the resistance area. So stop loss would have been about 15 pips. Probably would have pushed that up to 20 pips. But yeah, the stop loss would have been quite tight on this trade. First target would have been around about 20 pips. Around about here, because we can see as price pushes down into these areas, it often struggles. And here, and there too. So I would have set a first target around about 20, 25 pips. Yeah, around about here-ish. And stop loss 15 to 20 pips. Ah, I see what you mean. You're worried because of the low volatility the spread is going to take out. Norbert is saying that his fear with low volatility is that when a trade triggers, the risk-reward ratio, because of the high spread, it's a lot easier for your stop loss to be hit. And that depends a lot on your broker. But if you're trading with an ECN broker, which is what I advise these days when trading Forex, you should be trading with an ECN broker. If you're trading with an ECN broker, I would kind of strongly suggest that you trade with an ECN broker, because then you're paying commission and spreads aren't that big a concern. Tina, I put my stop loss after the trade triggers. Yeah, I never place my stop loss before the trade triggers. Otherwise, you'd get triggered into a trade by your stop loss, depending on your broker. But that's generally a bad thing. Where was that trade? Euro CAD. 6 hour. This huge candle today has made it almost impossible. Makes it really hard to show this trade to you guys because of this candle here. But I'll show it to you guys anyway. So this trade was a failed trade from this week. This trade didn't work out, and I wanted to show you guys this trade because, you know, it looked like a good setup. So we have a nice strong preceding trend. We have indecision forming right where we want it, right on top of that support resistance area. And then we have that kind of reversal forming, you know, prices falling down. But the first target, some people made profit on this trade, to be fair, but most people didn't, because they came just shy of their first target. You can see price spiked back up here, and that trade got taken out. This is another kind of danger. It can happen, but these kind of things don't happen that often. But this is something that can happen, and a lot of the times this happens. You switch up to the higher time frames, not in this case, but you switch up to the higher time frames, and then you see that the trade would have worked out perfectly on the higher time frame. So sometimes with price action, it's hard to tell where the setup is forming. Sometimes it looks like it's forming on the 6 hour chart or on the 8 hour chart, but it is in fact forming on the daily chart. So you're jumping in a little too early. That is one of the snags with my strategy, that, you know, there's pretty much no way to filter those trades out. It's something you're going to run into. I mean, overall, obviously my strategy is profitable. I've been trading it for going on 10 years now, and Forex is my main source of income. So it is profitable, but there are going to be little things that you run into, and this is one of them. When you get a trade that triggers and it looks really good, and then it just kind of pops back up, bam, takes you out, and then it goes bam straight back in your direction, and it would have been profitable. It just didn't work out. It kind of sucks, but it is one of those things that does happen. And like I said, not particularly in this case, but a lot of the times when you pop up to the higher time frame, you'll see that that trade would have worked out perfectly had you traded it on the 12 hour or on the daily instead of the 4 hour. But yeah, there's pretty much no way to filter those kinds of trades out. They just happen. Euro CAD on the 4 hour. Yeah. But like I said, man, it's NFP tomorrow. It's going to be so risky to enter a trade. I'll throw up a support area here, and then I'm going to see if this is actually a support area. It looks like a support area. It's more like down here. Yeah, I don't think this is a viable trade on EuroCAD, man. Sorry to say. Yeah, it's not a good trade on EuroCAD. Let's check out GBP/USD, see what that's doing. This is the support area I have on GBP/USD. We were talking about this a bit before the webinar. Seems like GBP/USD is finding a bottom right now, which is quite nice. But like I said, almost all these trades, they look good. They look like they might have potential. I might be tempted enough to enter, but it is NFP tomorrow, and NFP is one of those days where it's extremely risky to enter any trades. Anyway, guys, we're running a little bit over time, actually. So let's do questions and answers. If you guys have any questions, I'll answer them. So yeah, questions and answers time. Is 40K good enough to trade full time? Yeah. Well, it depends. I mean, what kind of lifestyle are you accustomed to? And you should not trade 40K until you're already trading successfully. Jay, no, probably not. I would need to see volatility return to 2009 highs before I would consider trading breakouts. And I really don't see that happening in the next few years. But I guess, I mean, if volatility were to return to 2009 highs, then yeah, I'd probably consider trading breakouts again. But 2009 was insane. GBP JPY would range 400 pips in a day, and it could move like 1,200 pips in an hour sometimes. You know, in times like that, then yeah, trading breakouts makes absolute sense, but I would really hate going back to those times. I'm very happy with the way the Forex market is working right now. Everything's calm, everything's relaxed. You don't have to worry. You could step away from your chart for an hour and the price won't have moved that much most times. What's the best time frame to trade in today? I would say 6 hour and 8 hour. 6 hour and 8 hour definitely my favorite time frames. Also 12 hour, but you know, you're not going to get very many intraday trades on the 12 hour and daily. You're looking at a pretty, I don't know, 12 hour, I guess, but I would say mostly 6 hour and 8 hour. What is the best way to trade low volatility? Price action. In low volatility, you look for reversal setups, price action reversal setups. They're very, very simple. Price action reversal setups, you get nice strong preceding trend, heading into a predefined area of support or resistance like you see here, then you get that reversal. You know, that's how you trade low volatility markets. It's simple, it's stress-free, because if you're trading this on the 6 hour, the 8 hour charts, you see setups forming like, I don't know, 8, 16, 12, 24 hours in advance. I mean, like this setup here, Andrea told me about it during the webinar. There's no rush to enter this setup because I'm seeing this forming now. So I've made a mental note to check on this candle when it closes. I'm going to check on this candle. I'm going to see if the setup looks potentially good still, and I'm going to enter it. But I now have, at a bare minimum, 2 hours to plan this trade. At maximum, it could be 8 to 12 hours to plan this trade. So price action based reversals are the best way to trade, in my opinion, the best way to trade in general, but particularly in these low volatility markets. Trading these reversal setups is definitely the most effective way. I mean, the last 3 weeks have been some of the best trading weeks of this year. This week, admittedly, has not been that good. It hasn't been bad. It's just there hasn't been that many trades, but that's to be expected because of the US and Canadian bank holiday on Monday, and then NFP week is just generally pretty slow. But the last few weeks have been amazing, and I can think of no other way other than price action reversals or just price action trading in general. And the great thing about price action trading is it's adaptable. I mean, the only change that's been made to my strategy over the last year is support resistance areas are now closer. And I tend to move my support resistance areas a lot more, but that's not a major change to the strategy. My strategy has been working from high volatility to low volatility with very, very little maintenance. Is there any room in the advanced course? Maybe, but I don't really want to talk about the advanced course right now. I don't want webinars to be a lot of people in Forex, a lot of educators that aren't really Forex traders that just have websites to sell stuff. They use webinars to sell products. They're like, "Ooh, take this little peek at my strategy, but I'm not going to tell you everything you need to know because you need to pay for that." I don't want this webinar to be an advertisement for the advanced course, so I don't really want to talk about it. There's no space at the moment. There probably will be soon. But yeah, I'll let you know via email if there is space. A recording will be available tomorrow. See you later, Michael. You grew your account from 1,400 to 2,400 in 2 weeks using my strategy. I don't know what to say to that, man. I mean, that is good, obviously, but if that's not good money management. I'm sorry to say. Making 1,000 in 2 weeks on a 1,400 account, unless you've taken lots of very good trades, and I mean lots of very good trades, I don't think you're managing your money properly. I think if you hit a bad week, that 2,400 is going to go down to zero pretty quick. I'm not sure exactly how you're trading, but generally speaking, those kind of gains are just unsustainable. It's unsustainable growth. No problem, Gator Pips. Is it worth checking gold? Yeah, definitely. Gold, a lot of people in the advanced course trade gold. I don't trade it personally. I'm not a huge fan of gold trading, to be honest. It's just too volatile for me, but a lot of people in the advanced course trade gold successfully. Using my strategy, but they use it on gold, and it works. I mean, they're making profit. What day of the week? Generally speaking, Wednesday afternoons, Thursdays, and Fridays is generally when we get most of our setups, which is fantastic because of rollover. You get triple rollover on Wednesdays, but most of our trades happen towards the end of Wednesday, and then a lot of brokers don't charge rollover on Thursday and Friday because they charge triple on Wednesday, so you get to avoid rollover. It's one of the bonuses that I've always liked about getting trades late in the week. I'll email about the advanced course. I don't want to advertise the advanced course in this webinar. Dean, You missed the beginning that I talk about how to play support resistance areas? No, because support resistance areas, they require a webinar for themselves. You know, you need a whole webinar to explain the intricate steps behind placing support resistance areas. I mean, once you learn support resistance areas, they're pretty simple to place, but to explain it, it requires an entire webinar. So I didn't want to make this entire webinar about support resistance areas, but there have been recent webinars in which I've discussed support resistance areas, and I will be linking to them when I post this webinar. So you'll be able to learn how to play support resistance areas. Nick, today is Thursday. Assume that tomorrow there aren't many news reports. Would you enter in a trade or stay away because Friday is too much near? Oh, basically you're saying because today's Thursday, would I jump into a trade because Friday is near? Yeah, definitely. I mean, I don't like holding trades over weekends, but I don't mind jumping in on a Thursday because, you know, I figure that most of my trades are going to be closed by the Friday anyway. If it's a daily chart trade, I might be somewhat hesitant, but overall, I'll just jump in, and if the trade doesn't hit my full target by Friday, I just tend to close out the trade. I rarely hold over the weekend. In my experience, what are the better months? It's hard to say because generally speaking, the summer months are very slow, but this summer has been incredible. So it's hard to say. It's not really that consistent in Forex. I know a lot of people like to make you think it's consistent and they come up with, oh, this is the best month, but it's just not really that consistent. One thing I will say is, generally speaking, November and December are not fantastic months to trade. So I would stay away from November, December. January, February have consistently been good months for me. Even March, January, February, March has consistently been good for me. But as far as that goes, I don't have a favorite or a best. Sell in May and go away. Medium news report. So Jay is saying sometimes medium news reports cause markets to move when there's a surprise, when they come out way off consensus. Do you tend to avoid certain medium news reports? No, definitely not. If you start to worry about every single orange news report on Forex Factory, you're never going to be in a trade. I ignore most reports, even most red reports. I've just learned to ignore them because I'm trading 8-hour timeframes mostly, and those reports don't tend to have enough of an impact on the larger timeframes to disrupt my trades. I mean, I'm not saying I completely ignore the reports. If there's a major report for a pair in which I'm trading, so if I'm trading AUD and there's a major AUD report or a New Zealand report because that impacts the Aussie dollar, or even a Chinese report because that impacts the Aussie dollar, I'll probably not jump into the trade until after the report. You know, a little bit of caution is advised, but to avoid trading whenever a red report is around, you know, you start to miss out on a lot of great opportunities. So guys, the one thing I don't understand about people who are trading Forex is, why does everyone feel, maybe you guys can explain this to me, why does everyone feel that you need to have the same charting platform as your trading platform? Why does your charting and your trading have to be all on the same platform? What's wrong with having a charting platform and a trading platform? Because it gives you so much more freedom. If you have a dedicated charting platform, you can get the best charts, and then when you go look for a broker, you're not bothered with their chart, so you can get the best broker. Who cares if they're on MT4 or MT3 or MT1? It doesn't matter. It doesn't matter if their charting platform is absolute rubbish, because they're a good broker. They execute trades, you know, specifically when you want to enter, and they don't slip you that much. They send you your money when you want to withdraw really quickly. Why does your charting and your trading platform have to be combined? I have a separate charting, separate trading. That's how I do it, and I prefer it that way. I can get the best charting platform for me, which at the moment is eSignal. I like eSignal. It's fantastic. It's a bit laggy, but overall eSignal is really good for charting. It gives me everything I need. And then for my trading platform, I go with my broker, obviously. Do you place pending orders as a rule? No. I do place pending orders, yeah, but it just depends. If I'm going to be away from my computer, I'll generally place a pending order. If I know I'm going to be around, I'll just enter. At times, get trapped in a trading range that I saw. At times, one get trapped in a trading range at support resistance areas. What's your take on that? I'm not sure what you mean, Catlin. You might have to re-explain that. Yeah, TradeView is good for charting. Chart IQ is awesome for charting. They're $8 a month, $8 US, so they're pretty cheap. Unless you want indicators, then they're expensive, and you don't really need all that stuff that they offer though. So eSignal obviously, but that's really expensive. Pro real-time charts are good. MT5 charts are decent. If you want to just chart on a demo account, which isn't that bad. I mean, I know it doesn't feel like you're a serious trader if you're charting on a demo account, but to be honest, you're just trying to access good charts, and MT5 charts are pretty decent. I still use MT5 to place my support resistance areas. To place my support resistance areas, I still use a demo account. This is the account I use for my support resistance areas, because eSignal, my main, I use this for looking at my trades. They don't have that much data, so see, it'll stop eventually. It'll stop pasting in this data. So I use my Alpari MT5 demo account to place my support resistance areas. Then for my actual charting, I'll transfer all the support resistance areas to eSignal. How much do I check currency correlations before entering a trade? I don't know. I mean, I check currency correlations at least once per week, but I don't check them every time I enter a trade. I just have a quick look at them, and if I'm entering multiple trades at once, then I do check currency correlation. Oh God, it doesn't matter. If I'm entering multiple trades at once, I do look at correlations. But as long as I'm only entering one trade, then I'm not that bothered. Andrea, no, that's cool, man. I mean, in the advanced course, there's like heaps of people that have different platforms. So I'm very used to having candles that form that open at different times. That's one of the reasons I switched to eSignal. It was so I could help out advanced course members a lot more, because with these charts I can. It sounds like I'm advertising eSignal. I'm not advertising eSignal. I don't think anyone should go with eSignal unless they are trading successfully and making significant amount of money trading. I just want to make that clear. I'm just talking about it because I want to show Andrea this. With this, I'm able to change the time my candles open and close. So I'm totally used to this, man. I know that a lot of people have candles that open and close at different times. and I routinely change this time to match the time or whoever I'm talking to on Skype at the time. When they're asking me about a setup, I'll change this, and then I'll get different looking candles. Yeah, so that's cool, man. You don't have to apologize. Yeah, I would. That's not really a question, but you're saying New York charts have the clearest setups, and yeah, generally speaking, I don't know if I would agree with that, but a lot of people think that, and I don't really. I don't really use a specific time anymore. I just switch and look for setups because I'm so used to switching my open and close time for my candles on my charts. Because, like I said, everyone in the advanced course has different brokers, different open and close times. So I switch them so often, I've lost track of what I use. Andrea, what you mean is maybe you're entering a bad trade based on your charts, but on mine it looks like a good trade, or vice versa. No, that generally doesn't happen. Is sound cutting out for everyone, or is it just for you, Ken? That sounds silly. I'm not asking Ken, I'm asking you guys in general. Is it? It seems fine for most people. All right, but it doesn't matter. We're half an hour over schedule. The webinar was supposed to end 30 minutes ago. So I am going to call an end to this webinar.